The modern state, particularly the so-called Westphalian state, that has characteristics of European creation of state, where the state is divided into the executive, the legislature, and the judiciary, is something that is unique in the sense that for many young nations, particularly those which were colonized, they had it imposed on them. You will remember in most of the world where the imperial powers were, they were dominated. If it was the British, the French, the Portuguese, the Italian, the Germans, and the Spaniards, they ruled these countries that they dominated as external territories of their countries, and they were controlled from the metropole. For example, the Dutch would control Indonesia from their country in the Netherlands. And when the countries regained independence, the financial architecture that they inherited was an architecture that was alien. And it was alien in the sense that the states were run on the basis of taxation. And therefore, it was assumed that if you tax the resources of the people, then they would be in a position to run the state. In many African countries, it started with poll tax or hard tax. They would say, you own this, then we are going to tax you. And taxation, therefore, became the source of financing affairs of the state. And the state has many affairs. Its defense is one of the things that the state was involved. How do you finance your defense? How do you finance your civil service? How do you finance importation of goods and services? So taxation is the major source of financing for any nation. But it soon emerges that the domestic resources that is obtained through taxation are not sufficient to take care of the needs of the society. And this is how loans come about. And these loans come about because they are institutions that are deliberately created to lend money to countries. And the colonial governments were the creators of these institutions. So that if you look at institutions such as the IMF and the World Bank, first of all, they were created, as we know, in Bretton Woods in 1944, just about the period when the World War II was in its last days. And these were institutions that were created in those early days to lend, particularly to the European countries that had been devastated by the war. So many African countries and non-African countries in Asia and in Latin America became grafted members of the IMF and the World Bank. So even when we say that Kenya is a member, Nigeria is a member, and all these countries are members and therefore decision makers of the World Bank and the IMF, and much later the WTO, which was also created and was conceived at that time, we must always remember that the membership of these countries is a grafted membership. We must always remember that they do not control these organizations. We must always remember that these institutions are created deliberately to ensure that they are under control, because, as the saying goes, the lender will remain the master of the borrower. And because the international economic architecture is also alien to many African countries, and of course that is true of Asian and Latin American countries, find themselves in a situation where they are playing a game that they do not understand and a game that they do not control, leading to indebtedness. In order to run these states, which are alien to us, you then incur debt. And then these institutions also ensure that they control your institutions of decision making. So you'll find them offering you advisory services. You'll find World Bank offering you a Ministry of Finance advisory services, IMF offering you a Ministry of Finance advisory services. And it's in the best interest of any lender that you continue to borrow. Sooner rather than later, you find yourself in a trap. And this trap creates an environment where you can no longer repay the debts that you borrow. That must also be understood in the context of the recruitment of political leadership in games that allow for corruption and wastage. So many countries therefore find themselves in a situation through the advisory services of IMF and World Bank and other institutions where they can no longer afford to service their debts. They have borrowed domestically, they cannot service the debts. They have borrowed from these multilateral institutions which they claim to be members of, and they are not in control. They have borrowed bilaterally from other institutions because there is multilateral borrowing and there is bilateral. You'll find a country has gone to China, has gone to Turkey, has gone to the United States, has gone to the European Union or individual countries such as Italy and the United Kingdom, and they have borrowed. So you find yourself in a situation where the ability to run your country is reduced because you have gotten into a debt trap. And that, in my view, is what IMF and World Bank loves. Because once you are in a debt trap, it means that your politics can also be controlled. It means that you can be directed on how to run your affairs. It means that you can be guided on what to do. And many times, these are not good Samaritans. They are bad Samaritans. They simply want to see you tottering along without ever freeing yourselves. And many African countries, many Asian countries, many Latin American countries have found themselves in this situation of a debt trap. And ironically, when you are in such a situation, the IMF and the World Bank, or as we call them, the Bretton Woods institution, come and tell you what to do. And the solution they prescribe normally get you deeper and deeper into the muck and mire of debt. All of us will remember in the 1980s when they came up with the structural adjustment program. They told government, get out of business, sell all your assets. And we know the consequence. I've always said, and I repeat it, that whenever the IMF say that your economy is doing very well, you should be very worried. We have seen it at one time when they said that of Argentina. We now know where Argentina is. We see what they said of the economy of Ghana, and we know where Ghana was. We know they are saying that of Kenya. Beyond the statistics, whatever they say about your economy is never matched by actual beneficial economic activity on the ground. I call it statistical growth, statistical El Dorado, land of gold. But in reality, you are suffering. So the architecture of international economy and the architecture of international commerce is designed particularly by Western countries to ensure that African countries, Latin American countries, and to a certain extent, even some Asian countries are kept in a perpetual state of desperation so that they continue to be economically dominated. Because when you are economically dominated, it is also possible, therefore, to exploit your resources. It is possible to ensure that you export your cocoa in its raw form, export your tea in its raw form, export your minerals in their raw form, export everything in their raw forms. It kills invention and innovation. And then you become victims of what they describe as foreign direct investment, which in many cases is a perpetuation of that financial slavery, which is wrought upon many African countries by those institutions. When we talk about the economic circumstances and the role of the Bretton Woods institution and understand the Bretton Woods institutions as instruments of economic control, There have been cases where this has brought about the question as to whether countries can survive outside of the orbit of the Bretton Woods institution. I'll mention different examples in the recent past. Chile at one time said, we are going to get out of the orbit of the IMF and, of course, the World Bank. Much more prominently is Russia. And Russia is prominent because it is a resource-rich country. It is a country that has an economy that is bigger than most, and it is an economy that is capable of being robust in its own right. It is an economy that has always tried to move away from dollarization of its economy, because it must also be understood that the IMF World Bank structure also means that you dollarize your economy and that you use the dollar as the point of reference in all your transactions, which makes the United States dollar the biggest beneficiary in many ways. And if you look at what the Russians have done in the context particularly of the Russia-Ukraine war, one of the things that has emerged is that Russia did not want to be in this sphere of economic dominance. And with the encroachment of NATO and countries joining the European Union and therefore getting into the dollar-euro orbit, the Russians resisted, culminating in many ways in the war that we now see. But it has played out in very many interesting ways, that progressively the Russian economy, which is now described as a war economy and therefore moving away from this dollarization, moving away from the IMF and World Bank orbit, is now said to be the fourth largest economy in the world, which suggests, therefore, holding all factors constant, that a country can actually move out of the orbit of the IMF, World Bank, and therefore the Bretton Woods institution, if one may, and realize economic growth if there are certain fundamental factors which underpin that economy. And this in itself is indicative, therefore, of what African countries and Asian countries and Latin American countries can do. It may be argued that individual or some individual African countries are too small to be viable. And this is what therefore legitimizes the constant argument that some of us make, that if you are too small to be viable, then have economic blocks. Have blocks such as the East African Community, blocks such as SADC, blocks such as ECOWAS, blocks such as the West Central African countries, blocks such as the Maghreb, and borrow a leaf from the Russian environment and the Russian experience and move away from the dollarization of the economies. I've seen in the recent past, for example, Tanzania has now said that tourists should spend money in the Tanzanian shilling. And I've seen a number of countries, I think Russia now spends or does most of its transactions in the ruble, and the Chinese doing so in the yuan. The single statement that emerges, therefore, out of the Russian experience in the context of the conflict with Ukraine, which has many layers, is that freedom, true freedom, can only be gained if you are no longer intimately connected with institutions whose prime agenda is to keep you in a permanent state of indebtedness. In 1987, the then president of Burkina Faso, Thomas Sankara, said in Addis Ababa, Ethiopia, on the occasion of the Heads of State Summit, that we need not be forgiven the debts. We simply stop paying the debts and treat them as reparations for colonization. Whether African countries are brave enough to make that decision is a different debate. But I hold the view that if Africans as African Union were to take a position and to tell the IMF we are incapable of paying these debts and we want to have them re-examined, there is a solution that could be found in that engagement. And it is not only African countries, even Latin American countries can make that statement, and Asian countries can make that statement. some of the most indebted countries to the World Bank are India. India, I think, is the most indebted country to the World Bank, and Indonesia. And these are big economies which you cannot ignore. So there is a possibility that if people were to stand their ground and were to come out and say that these loans that you have been giving us are usurious, then they would begin to listen. And even if some payment is to be made, it would be the kind of payment that does not cripple our economy. If you look at some countries, Kenya included, out of every 10 shilling that we make, almost 50% of it goes into payment of loans. And those are loans to the IMF, from the IMF and the World Bank. Another also goes to bilateral and other lenders. And it is simply not sustainable. It is not sustainable. Countries are going to find themselves in eternal servitude because of these loans, because of this infrastructure that has been created. And there are countries that have deliberately gotten out of this particular orbit. Of course, one may say that they suffer because of it, but sometimes it is better to cut your coat according to your cloth. If a country or countries choose to live within their means, then I hold the view that within a period, a country can get into a space where through taxation and through the effective use of their resources, they can liberate themselves from loans. And there are countries such as that. If you look at countries such as Botswana, their levels of indebtedness are very low because they have chosen to live within their means. It is possible to do so. If you choose to use your resources as the basis of ensuring that you gain this freedom, if you go to countries such as Guinea, countries such as Burkina Faso, even the Democratic Republic of Congo, it is possible for them to actually use their resources within a defined period to live within their means. It doesn't mean that you will not suffer in the short to medium term. You will. But look at the pain that is occasioned by this kind of borrowing that we find ourselves in as long as we are in dalliance with the IMF and the World Bank. And not only those, there are other very dangerous bilateral lenders and very dangerous institutions which also ensure that you are in this state of indebtedness, and it can be done. And this is the challenge that one therefore places on the laps of African economists. What do we do? African central bankers, Latin American economists and central bankers, Asian economists and central bankers, can we come up with models where we ensure that we are debt-free, or even if we are to have debt, it is debt that we can pay within our resources. This can be done, but we have become so beholden to this institution that the greatest claim to fame of many African economists or many Asian economists, particularly African economists, is because I have a consultant with the IMF. I have a consultant with the World Bank. I was an employee of the World Bank. I was an employee of the IMF. I had an internship at the EU. It's as if it is a badge of honor. It is a slave saying, I was serving in the slave master's kitchen. That is not a badge of honor. It should be something that we don't even entertain. We have been training our economists for many years. And there is a book which has been written by Zambia's Dambisa Moyo called Dead Aid, where she says, and I agree with her, that aid and loans of the kind that Africa continues to receive will only ensure that Africa is in a permanent stage of servitude. There is yet another one called The Bad Samaritans, written by South Korea's Jun Chang, where he says that all these institutions represent what he calls the unholy trinity. The unholy trinity in his mind are the IMF, the World Bank, and WTO. Those three institutions, he says, and I agree with them, have only one end game: keep them in debt. and control and milk them. If you borrow and you use your money wisely, there is a sense in which you can realize things that you would not have realized without borrowing. We cannot simply condemn that all loans are useless. It is the truth that if you borrow and use creatively, we have seen certain infrastructural development in Kenya and elsewhere, which have been financed by the World Bank, which have been financed by the European Union, which have been financed by the Chinese, and to a certain extent, they have contributed to the kind of economic status that we have. But at what cost? Because sometimes you borrow money and you use it in a manner that is only beneficial in a very minimal way. But it is true, just as individuals may borrow money for their personal benefit, if money is used creatively, then indeed it can be useful. But we are saying that there are better ways of doing it. To the extent that is possible, if you use your resources, you are not indebted. If you use your resources, then you have greater opportunity for self-expression. If you use your resources, then you don't find yourself in political servitude. If you use your resources, then you are free from the control of these institutions. If you use your resources, then your bills are not then drafted for you by external institutions. So the best case scenario is to avoid loans, domestic or external, as long as it is possible. But it is true to say that loans have been used in a number of countries to good effect in different sectors, whether it's in health, whether it's in education, whether it is in the mining sector or those extractive sectors. But many times you also know that countries have borrowed loans which politicians then embezzle and or misuse to the detriment of their countries. And this is part of the agitation that you see in Africa, that 50% of the times we do not see what those loans that we borrowed both domestically and externally do for the benefit of the people. They have their own officers on ground and they audit their projects. But when there is collusion, sometimes these audits are very perfunctory audits, and the net effect is that the audits may be carried out, but that doesn't take away that some projects are overpriced. We now know, for example, that the SGR in Kenya was overpriced, and we know that sometimes these institutions also lend you money, and a good percentage of that money is taken away and taken back to them through consultancies, so that you don't get the full benefit of the money, but yet you have borrowed and your citizens will continue to pay that money through taxation, which is very expensive and very painful. So those structures exist. If you want to tick the boxes, you'll be told, yeah, we borrowed so much, we expended so much. So every box is ticked. But people are now going beyond the ticking of boxes and saying, did we have value for the money? And in many cases, people are saying we did not get the full value of the money, and this is why we are unhappy. And they can go back and make reference to some of the activities of these institutions through their programs, such as structural adjustment, which we know about in the 1980s. And they told us that this was the magic cure for these particular problems. We now know that it was snake oil. This one-size-fits-all prescription where you go to Zambia, tell them to do the same thing. You go to Zimbabwe, do the same thing. To Kenya, do the same thing. Nigeria, do the same thing, is not good enough, because in your own countries of origin, you don't allow that to happen. You only prescribe it for Argentina, for Kenya, for Bangladesh, but never for yourselves. What do you know that we do not know? It has been said, and with some degree of truth in it, that the economic prescriptions, both the macro and micro economic prescriptions of the Bretton Woods institution, not only IMF, to include the IMF and to include the World Bank, and to include even some of the realities to be found in the WTO, are of such a nature that if you swallow them line, hook, and sinker, you find yourself in problems. It has been said with a measure of truth that these institutions will lend experts to your institution. You'll find IMF experts in your central bank. You'll find them in your Ministry of Finance. You'll find them in different sectors of your economy telling you that because you are part of the international economic architecture, and because we are lending you money, these are the conditionalities that you must satisfy before we lend you money. And when they do that, even when you are crafting your budget, they will be there. Their unseen hand will be there. When you are crafting your bills, their unseen hand will be there. They'll be telling you, in order for you to ensure that your economy is stable, we want you to tax this. We want you to tax this. We want you to increase your value-added tax. We want you to tax people in this income bracket, so that when you look at the entire scenario, you discover that what you think is your finance bill is actually the handiwork of these institutions. And the net effect is that your population will react, will say, even if we are cow, you milk us until there is no more milk. What we see is blood. And this is the fate of many African countries. Say, you are taxing us to death. You are taxing everything. You are taxing whatever little we have. We work for you, and yet we don't see the services. I've had Kenyans and Africans say, if we could see what our taxes are doing, then we would not mind being taxed. But you are taxing us, the quality of our roads are not good. You are taxing us, we don't see good health services. You are taxing us, and yet we are taking our children to private schools. You are taxing us, and we can't get job opportunities for our young men and women. Why are you taxing us? This is what they are asking. And this is why people then get angry at IMF and those institutions by telling us, you have come here, you've neutered our government. The government no longer has say. You are effectively governing our countries by putting our countries on a stranglehold. We don't want you. And then they come out and say, our duty is to ensure that there is what we call macroeconomic stability. What is macroeconomic stability if men and women in the informal settlements, if men and women in different parts of Kenya cannot survive? This is the message that is being sent to these institutions. If I was asked, I would say that our country has found ourselves at crossroads. And when you find yourself in such a situation, it is a time for deep reflection. I would say, let us look at our entire governance structure. How do we govern ourselves? Number one, do we run a government that is too heavy, too expensive? I would ask myself, do we need the size of cabinet that we have? Do we need the size of the civil service that we have? Do we need the size of parliament that we have? Do we need the number of devolved units that we have? Can we afford the salaries and allowances that we are giving to our people? Number one, on the political side. Do we have areas of wastage that we can ensure are addressed so that we only expend money where money is necessary? Do we have an economic architecture that we can afford? Are we taxing things that we ought not to tax? If we ask those questions, do we have local expertise that can do this? In our Kenyan environment, we have departments of economics of different universities. Is it possible that our economists can sit down and come up with an economic architecture that is capable of addressing our needs? How do we use this? Has it been done elsewhere in Africa? Yes, there are countries that have re-examined their economic architectures and leveraged on their strengths to ensure that the economy is run well. What is it that the Singaporeans did? What is it that the Mauritians are doing? What is it that is happening in Botswana? What is it that Russians under sanctions are doing? What is it that the Chinese under sanctions are doing that is making their economies vibrant? What is it that the Indonesians are doing? And then we borrow from this and domesticate them. And I tell you, if we do this and we begin to live within our means, within 10 years, you would be amazed at how our economy is self-sustaining and how our domestic borrowing reduces, how our external borrowing reduces, and how we can create opportunities and an environment where when people come to invest in this country, they are investing in a stable, predictable environment that is capable of giving them profits and also capable of ensuring that they create jobs and transfer technology in this country. It is doable, but you must have the political will. You must have the vision and the desire to do it for the long term. The youths have a role to play. Throughout history, it is young people at their most innovative state that you use. If you look at all the countries that have realized the potential that they have, it is young people between the ages of 25 and 40 who are engaged, are deployed in production and innovation under the guidance of older people. Ask South Koreans. Ask all these countries. Even ask the United States of America in their early years of development. Ask Europe. It is young people who are involved in these initiatives. So they have a role. This is why we take them to the universities. This is why we train them. They have a role to play. And they have a role to be engaged. They only have to be enabled and they have to be given the opportunity to invent and to innovate. Then the countries that we live in will realize the dividends of their intellectual labor.
This is the journey to One Africa.